Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. My name is Henry Lau and today is Friday, February the 1st, 2019. The time is around 3:45 a.m. GMT. So today we will be looking at oil. We last talked about oil, I believe a week or 2 weeks ago. And as you remember, if you have been following us for a while, that we said that we are bullish oil, right? We are bullish oil. Now, since then, oil has moved again, and we tweaked the count a little bit in the shorter cycle, but still, it's the same idea that you can see over here. There is a bullish sequence. The right side stem is green, right? And so we put all this on our charts to help our members to identify whether something has a trend and whether something is tradable or not from our perspective. And also we put the instruction here, right? So what we tell members is that we do not like to trade against the right side stem. So if the right side stem is green, that means the trend is higher, and we do not like selling this kind of move, even though the chart is calling for the downside, right? And also we put bullish sequence stem over here to indicate this is really a bullish market, so don't try to sell it as a result. And if it is bullish market, then that means we do like buying more, right? We do like buying any pullback if we can see in the sequence of 3, 7, 11 swing. Now this is a 30-minute chart, so it's a short-term chart. We can see over here that this rally to $54 on January 21st ended with A, and then this pullback here to $51.37 ended with B. Now you can see the internal of this pullback is clearly in a 3 swings, 1, 2, 3, right? This is called we call it WXY. Now many of you are not very familiar with WXY. Many of you only knows ABC, but if you want to call this as an ABC, you need to have a 5 waves here and a 5 waves there. That's the definition of an ABC zigzag. It needs to have a 5, 3, 5. But over here you can see clearly at especially this leg here, how we only got 1, 2, 3 subdivision, right? So we cannot really, I mean, this is 1, 2, 3, 4, 5 as part of the C leg of this red degree. So we can see clearly here, this is a 3 swing here, and this one also, if this is a 3 swing, you know that we cannot force this to be a 5 waves, right? It's just not a good idea to force something if it is not really looking like that. So in this case, we have a WXY correction, which is technically similar to ABC, just different label, right? And a WXY means that the internal in the Y in the W, they are all in 3 swings. So this is clearly in 3, so we have to make a count for this so that this is counted as a 3. So this is a zigzag as well, A, B, C. So this one is a 1, 2, 3, 4, 5. 5 waves ending with A, with B, and then with C, ending W. So it's a 3 waves, and then we got an X, all right, as a flat A, B, C, and then we get the Y in blue as another A, B, C. All right, so now we have, after ending this B pullback at $51.37, oil rallies from there, and then it broke above the previous peak, which is with A. So that suggests to us that the wave C has already started because it broke the previous pivot, right? And you can see that the rally also can be counted as an impulse. We got this 1, 2, 3, 4, 5, and then the wave 3 subdivided into another 1, 2, 3, 4, 5. This is a triangle, all right, and this wave 2 here is a flat A, B, C. It's called a running flat. So now we are in this wave 2 pullback in the blue. All right, and we are calling this as a zigzag ABC correction. All right, now if the C leg is going to reach 100% to the A leg, so that means that this pullback can give us a target towards around $52.45, right? Now again, will it reach exactly that level? May or may not be, right? Sometimes it does not, but it can if this is going to be equal to the A. Now we can even go, I mean, sometimes the market do something like this, a very short C, and then end it with 2 here and then starts to rally. Now that is also possible, but this is the more likable sort of path, is that this is extending lower into a 5 waves before ending this C leg, and then also ending the wave 2, and then as far as oil can stay above $51.37, we can see further upside in the wave 3 of C, right? So what will be the alternate to this scenario? If we look at the higher degree, since this is 30 minutes, let me go to the 4 hour. Now you don't see the Elliott Wave labels here because we don't want to show everything to non-members, right? You can always check our service. We have 14 days free trial, nothing to lose for you to check our service. Now you can see over here this rally that we have from last year on December 26. If we try to match the 1 hour here, we can see that this A label here is located somewhere around here, and then the B label here is located somewhere here in the larger degree time frame, right? So now it is quite clear that we got A here. So if this is an A, that means it must be subdivided into a 5 waves, and you can see clearly this is 1, 2, 3. Now without really going into the details, we can see clearly here, okay, this looks like a 1, 2, 3, 4, 5, and then you got the correction, the P, and then you got a new high. Now what will be in the alternate? Can oil break below $51.37? And the answer is yes, it can. So trading is all about probability, and it is always, every single situation, every single condition always has an alternate view. It's just a matter of ranking which one is more probable than the others. Now as a trader, your job always will be to manage your risk, because you know that you can always be wrong. There is always an alternate view, and so that means that if you want to trade, you make sure you always put stop loss and you always manage your risk by calculating the right position size, so that if your stop loss got hit, you don't lose your account, right? So that is really the key to be successful in trading. It's not about like how likely you're gonna win, what's the probability and things like that. It's all about the risk management and risk to reward ratio. All right, so in oil here, the alternate is the following. So you have a marginal high here, and the more likely scenario is that this is a new cycle, since we have already corrected in 3 swings and we already make a new high above the previous pivot. But since the new high is kind of like a marginal high, so the alternate is going to be, we can do an expanded flat like this. So if you're not familiar with expanded flat, then you can check our video in the YouTube channel. We got plenty of videos there. So I think one of them is talking about flats, or you can also look for the one that covers the title of the video is Elliott Wave Structure in Fibonacci Ratio. I think in that video I also talk about expanded flat. So the alternate is going to be doing an expanded flat, in which we have a wave A, we got a wave B, and then we got a wave C like this that can become a 5 waves before ending the B here. Then oil from there can start the C leg to the upside. So if this is the one that is playing out, that means this move here is wave 1, this is wave 2, and then we can have a 3, 4, 5 that can break $51, right? Because it's going to be a 5 ways down. Remember, in an expanded flat, the C leg is subdivided into 5 waves. So this could be with 1, with 2, and then now we're in the with 3, with 4, and then with 5. It's going to be, if that is happening, it's going to be a pretty steep sell-off in oil, right? So again, always use stop loss when you trade, and always understand there is always another alternate scenario in any situation. So I hope that you enjoyed this video, and next week I will be off, and I won't be doing the daily video, so maybe someone else will do. If not, then I will see you all again the week after. So have a good day, everyone.